Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:01 in the a.m. Eastern Standard Time, the 29th of October. So, yesterday was a bloodbath, long story short. The question is, does it end there? And in a moment, what we're going to do is we're going to segue over and into the pre-market futures. I'll give you my thoughts. I did send out market wrap to members last night, and I walked through in great detail our strategy moving forward. We did go into, we did go into yesterday with a short hedge on using a leveraged ETF called the SQQQ, which partially shielded us from a big gap down yesterday. Do we still have long positions? Sure we do. However, we were lightening up in advance of this sell-off in expectation of the sell-off. And I think that if you take a look at any of my commentary of late, I have been somewhat cautious on this market and have been encouraging people, lighten up. And the charts have been sending us signals, and we could argue that the stock market's corrupt, it's rigged against the little guy. You know, we can make that argument, and sure, in certain circumstances, it is. However, the leveling off of the playing field can be found on the charts. So today we're going to talk about earnings reports coming out today. It's a huge day. I'll go over those companies. We'll go over the futures. We'll talk a little bit about what is happening now, meaning just before an election, is in fact happening now. And we'll segue over and into some chart requests from members. And if I have a moment, I will take some requests from the audience. Before we go anywhere, though, tonight, being Thursday, as we do every Thursday night, is Thursday Night Stock Charts Live. The reminder is out there. If you want to join in, go over, click on the reminder button, or just simply go over and into, hopefully this has got a link on it, go over into the comments section of this video on the replay, and there's a link, get notified. 15 minutes prior to us going live, enter your email address. We hate spam too. If you're already on our email list, do not re-enter your email. You're going to get an alert. If you want to opt in for my top 5 most powerful candlestick pattern tutorial, just enter your email address there. Don't do it twice. I know people hate spam. Believe me, I'm in your camp. I'm with you. Let's get to it. Let's talk the stock market. All right. So, Guy Adami put this out about 5 hours ago. And I like Guy, one of the few people on CNBC that I do like. And unlike Dan Nathan, who's like a soy boy, but Guy Adami, S&P 500 futures up 30 handles. Can't wait to hear from all the people that bought the nasty close today, quote unquote. Unless, of course, this reverses and opens lower. So it's a valid point. You're going to have a lot of people going on TV, and they're going to come out and say, oh, yeah, I was buying the market. I did not buy the market yesterday. The futures are up right now. I'm telling you right now, I did not buy the market yesterday because I don't think that we're done going down. Bright green futures in the AM after a nasty sell-off, not even hitting support, is not a bottom. I did cover shorts. We did make those profits real. So I don't have much of a hedge on. I have one short trade out there right now. But otherwise, I may need to, if I do see that we're going to roll over today, may need to lean into the short side yet again because they're spiking the futures up higher. And before I go to the reason as to why we rolled over yesterday and why we may fade today, look no further than Nancy Pelosi after hours. And for those folks that are out there get triggered because of politics, I'm not choosing the candidate right now. I'm talking fact. I get some nasty grams from people who I'm talking politics. It's fact. This is our business. This is a catalyst for our business. And you have Pelosi, who came out after hours yesterday, right on cue, House Speaker Nancy Pelosi said she hopes the current sell-off in stocks will prompt President Donald Trump to agree to Democratic demands. She's holding us hostage. Holding us hostage. She wants to bail out bankrupt, corrupt states. I live in one. She wants to bail out corrupt states for mismanagement, only so they could do it again, to get bailed out during the next crisis. So have no doubt that this is all political and that we will see a rally in stocks immediately after the election when new stimulus gets passed. The question is the severity, the enthusiasm of that rally. How strong will it be? Will it be equivalent to the last stimulus? I doubt it. I doubt it tremendously, because the returns that we're going to see moving forward on more stimulus are going to be, it's basically the diminishing returns on stimulus moving forward. You need more and more stimulus to move this economy moving higher. It's like pushing on a string. That's why you have the Federal Reserve going to Congress saying, oh, you know what, there's not much more we can do here. Can you guys pass a stimulus package? We are very close to the end of our rope here in this economy. Let's move on to earnings, and then we'll go to the charts. Today is huge, folks. Today is huge. This is like the Super Bowl of earnings days. Today, after the bell, we have Apple, ADM. You're wondering why I'm talking about ADM? I'm big on agriculture. So while not necessarily a stock that's a market mover, it is certainly a barometer for where ag is going. So they report after hours. Also, Amazon, Facebook, Google, Shopify, and consumer discretionary names like Starbucks, they report after hours. Now, consumer discretionary got hammered yesterday. So it'll be interesting to see how Starbucks does today. This morning, Synovus, I did a video a few days ago with regard to Synovus and their acquisition of Husky Energy. It's posted on YouTube, or if you're watching this on the website, it's posted there. I think we made that call pretty accurate of what would happen. We've been watching DuPont. It's a watch stock. They report this morning. I'm going to go over their chart this morning to see whether or not I want to buy the dip. And in fact, we're going to go over CVE as well. And I do have some chart requests to go over for members, IBM in particular, and a couple of others. So let's get to the pre-market activity. And we'll begin. Let's begin with the US dollar. And the dollar, this is a 4-hour chart. These will all be 4-hour charts. The dollar is basing. And if you're long of commodities and you have fear in the markets, if it's not geopolitical fear, meaning an event over in the South China Sea, an event over in Europe, an event over in the Middle East, missiles getting launched, you're probably not going to see gold and the dollar trade in tandem. So at current, the dollar is basing. You have a W formation here, higher lows on a 4-hour basis, and it appears as though we're going to break out higher. Now, this is a 4-hour chart. We need to appreciate that in a longer-term, higher level view, weekly chart, monthly chart, the dollar is under a lot of pressure. So this could easily fail. But as we know it right now, at this time and place, the dollar is showing a bit of strength. That means that gold is going to have a little bit of a lid on it. Doesn't mean it can't rally. Let's go to it right now. We're flat on the session. We're up $1.40. Gold got hammered yesterday pretty significantly on a spike in the US dollar. I don't think we're done going down here. We may, for all I know. I think yesterday was the break I was waiting for. We did close down below the ever-critical 1900 mark on gold. We're looking for lower lows on the GDXJ before we back up the truck. You can see that we left the day yesterday on this 4-hour time frame leaning into the third standard deviation Bollinger Band. A counter trend move is expected. Might I step in and nibble like a deer at a brook taking little sips of water? Yeah, I may. I may. Because this was the break that we were looking for. We sold up here, not at the top. We sold at a reasonable price relative to where we are right now. Now we're looking smart. It took us a couple of weeks to look smart, but we divested a large portion of our position because things weren't looking good. The charts were sending us signals, and we acted upon it. So we're looking to rebuild our core position in the GDXJ at good risk-reward entry points. So more to come, members, on the GDXJ, because gold will find a footing, and it will move to new all-time highs in 2021. This is a seasonally poor period of time for gold. Am I surprised we're not seeing more of a bid on gold into the elections? Yes, I am. But we showed discipline. We did not act on our gut intuition. We respected the charts. The charts were not sending us a buy signal, and we avoided. And thank God, because yesterday would have been a hammer day. In fact, I want to illustrate something for those folks that are new to technical analysis, or for those traders that don't use Stokes in particular, or this is your first sell-off. I want to point out to you, and I spoke to members about this. If I remember, I'll take a clip out of it, the video commentary. I'll play it tonight. I have to remember to do it. I'll make a note to myself. So on this chart here, what we did on the 27th, right? 27th? Yeah, 27th. We flashed a bullish reversal bar. A very strong day. A very strong day. And we did so on above average volume, not huge accumulation like you saw back here, but reasonable volume. And I spoke about this with members and admitted, listen, I was tempted to go buying back some of our position on this bullish reversal bar. What kept me away? The Stokes and the RSI. And the fact that knowing that the GDXJ is in fact a stock. Net, gold miners are stock. Well, GDXJ is a gold miner, but you have stocks that are in there. So if you have a sell-off in the overall stock market, well, the GDXJ is susceptible to the sell-off because people will get margin calls and they'll be called to the carpet to sell whatever they need to sell so they can satisfy those calls. And you can see yesterday that we gapped down. We broke support. We are still weakening on Stokes, which still has me sitting on my hands a little bit. But today might be the day where, again, we step up to the brook. We take a couple of sips of water. We start to rebuild our position. But remember, underneath that brook may lie an alligator looking to gobble that deer up. So be very, very deliberate with what you're doing right now. This is a very dangerous market. Good morning, Larry. Yeah. I'm gonna save your comment there, Larry. Yeah, thank you for that. I don't think people really leverage the RSI and the stochastics. I did a video on RSI, as you know, Jedi, but many people don't. I did a video on RSI a couple of weeks ago. It's long. That's why YouTube is not pushing it, but I suggest go back and take a look at it. And I'm going to do one on Stokes as well, because people use RSI and Stokes way too much for overbought, oversold. They're not looking at divergences. They're not using it as a true momentum indicator. So had folks been using it here appropriately, they would have not bought this reversal bar. They would have waited for what I like to call the resolution of the stochastics, meaning a flattening out and a hooking back up. And that doesn't even mean a buy signal. You could roll back over and put in lower highs. What we want to do is see Stokes trade above the 50 mark. Then you have better closing price action than you do poor price action on any given day. Meaning you have longer up candlestick days and shorter down candlestick days when you have your Stokes moving up higher. It's the inverse right now. Just as you saw yesterday. Look at this long candlestick as opposed to the candlestick on the 27th. I'm getting long-winded here. I digress. Let's move forward. You can see my passion for using the indicators appropriately, not individually in and of themselves, but appropriately. I'll put it that way. You need to use them in conjunction with price, with volume to get it right. It's like an orchestra. All right, moving on here. So let's go back to the futures market because I got way off track. All right, so that's the GDXJ. Let's go to the NASDAQ 100. Dead cat bounce. I would not chase this rally. Folks, you know, I've been around for a couple of years, right? I've seen a couple of bubbles. And yes, we are in a bubble. Am I ready to get net short right here, right now? Not necessarily. Of tech, different story. I've been very bearish on tech for a while now. In particular, I've been very vocal about Microsoft and how I believe it is in a bubble. Now, this morning, NASDAQ 100s are off the lows of the session. This is not what bottoms look like. You do not wake up after a nasty sell-off looking for a bottom with bright green futures. Ideally, we would have woken up this morning to get this over and done with really quick, is we would have gapped down. We would have hit support levels only to see buyers step in and move the shares up to green by the end of business today. They're taking a different approach. They are ghosting the market, meaning they are luring people in with a false sense of security that all is well. Don't worry. Hey, it's a one-day thing. It's all over now. Come back in. It's okay. And by 10:30, noon, you would have seen a fade on the day. Don't let that be you. Don't let it be you. Could this be the bottom? Sure, I'm not that smart. But I doubt it. My years of experience are telling me no. No, this is not the bottom. Now, were we down here, if we would have gapped down to, let's say, 10,816 on the NASDAQ 100? Maybe. I would have been far more confident at that support level. Or even better, down here. As a matter of fact, I'm going to set up an alert down here. Because we do have some support levels between where we're trading at current and this support level down here at 10,874 on the NAS 100. And that's when I'll get interested in buying the sell-off. I'm going to move this up slightly so I can get a little bit of a warning ahead of it hitting support. But I do believe that the rally this morning is going to fade. So again, I will not be buying the market, pre-market, first hour trade. I never do anyway on the first hour of trade. Pre-market sometimes on a big gap down. Otherwise, no. Let's take a look at S&P 500. It's already fading. Go back to Guy's comment. He in the back of his mind, he's a technician. In the back of his mind, he's looking for a fade here. And I agree with that. And we were higher a few hours ago, this last 4-hour bar, which closed at 5 a.m. Eastern Time 21 minutes ago. But we have faded, and I think that this will be a dead cat bounce, which is fine. Because once our support levels get hit, I want to step in there and I want to buy. I want to enjoy the counter trend rally back. Because take note of a daily chart of VIX. The VIX, while yes, it's supposed to be volatile, it does get overbought. And we are overbought relative to the third standard deviation Bollinger Band in green. Does that mean it can't shoot up higher? No, of course not. It can. It can pull back, alleviate that overbought condition, and continue higher. So short term, very short term, I'm looking for a rollover, a continuation breakdown in the market, and then buyers stepping in advance of the election. The president is not without tools at his disposal to pump this market into the election. I have little doubt that he's going to use those tools to get the most bang for Treasuries and the Federal Reserve's buck by making these money center banks go in there and buy the futures. They should wait to see support levels get hit on the S&P 500, on the Qs, to get more bang for their buck. To do it right now, I think that they could do better. I wouldn't do it were I them. You want to see buyers of like mind, algos, get triggered at these support levels. We're not there yet. I think we're going there. So I'm not a buyer on this bounce this morning. Let's take a look at the small caps. I'm getting long-winded here. We have a few minutes left to go. Azores, I'm not sure if I'm saying your name right, so I apologize. I don't like that everything is moving with S&P 500. The cash there through the money market being 20 trillion and bonds being 100 trillion. We should be going up. Let's understand the whys behind this market. This is a market that is driven. The proximate driver of the market is easy money. It is the Federal Reserve. It is stimulus. So I don't want to get into how much money is sitting on the sidelines. We hear that whenever there's a weak market in the first half of the year, all we hear the pundits talk about is all the cash on the sidelines and how the second half of the year is going to be so much greater. I don't want to go there. I want to go with what's reality. Reality is that we have an economy that is built entirely on debt. That's a fact. We have a stock market which should be a lot lower than where it is right now. The question is, why isn't it? And the proximate reason is that last stimulus package or stimulus packages, and, of course, Fed accommodation. That's the reality. That's the proximate cause of why we are at these levels, even though we've had a sell-off, why we should not be at these levels, given the economy. So, while you're thesis may be accurate that the market should be going up because of all the money on the sidelines. Let's ask ourselves the question. If the market should be going up and you have all that money on the sidelines, what do they know that we don't? Why they are not putting that money to work and gaining more return on their equity than what they're doing at current. Because you could argue that if they're sitting in a money market account, all those trillions, they're losing money. Not just in terms of being eaten away by inflation and taxes, if the rich are paying taxes on it at all, but also opportunity lost by not being exposed to more risk assets. So those are my thoughts for what it's worth. So the Russell 2000 here, I'm going to leave off with this. We're going to go to a few other charts. The NASDAQ 100 is, the Russell 2000 is weak. We're up. I don't care about this. We're up spot 26%. I care about this. We rallied back overnight. We recaptured support. What did we do? This last 4-hour bar, we gave it up. I want to see lower lows here. Now I have to go live tonight, and I'm sure that I may hear, I shouldn't say I'm sure, I may hear that you called for a rollover. We didn't get it, Bob. What do you think now? I'm not always right, but I think that we are going to roll over, at least see red. We'll see a fade here, maybe sell off and then turn green, but I do not believe that this is the bottom, meaning the closing price action of yesterday. So we'll watch for lower lows here on the Russell 2000. Let's go over and into a couple of requests from members. Nadia, hello. Good morning to you. Oh, I don't want this. Who's that guy? There we go. Okay, IBM. All right, so IBM obviously in a free fall. Let's go to a monthly chart first to identify where we have historical support. And man, this is not pretty. So the market was sending us signals. They've been sending us signals for months now on IBM. The 186 mark has been like a concrete wall of resistance. It was support, now resistance. And we may hold support down here at 104.88. But I'll tell you, I'm concerned about a retest of, I believe this is March. Is this March? Yes. The March lows. And if we break, we're going a lot lower. So let's stay short term right now. I'd be looking for support at 104.88. Then after that, if we break support there at $90 per share, weekly chart. As a matter of fact, let's throw over some automated trend lines. This is TrendSpider, link below, 35% discount code, automated technical analysis. Yeah, take a look. They're picking up from prior lows. You can't see it on this chart here. Prior lows, historical support in green, which now has been broken. This is in the rearview mirror. Now we're looking for that 104, 105 mark to act as support, as it did here with a higher low back in April off the March lows. Weekly chart. So weekly time frame, in white here, we have the lower band of our third standard deviation Bollinger Band. This is a real-time indicator, a very short-term signal that we are at unsustainable levels in terms of trend. And while the trend may not may not reverse, it may pause or take a brief counter-trend trip higher off of this oversold condition. I think we're hitting 104, 105 first, though. Watch for an overshoot on IBM below this mark, and I do believe that there's a good chance that we rally back off of that sell-off. If I'm wrong and it fails, wait for a 90 handle on IBM. And I would not be a buyer unless we go intraday oversold. I would not be a buyer until the 3 p.m. hour, so that you don't get long in the morning, and by the end of business day, the shares have faded on you, and then you're sitting with a loss on the day. Wait for that final hour of trade. When you're trading corrections, it's all the more important to wait for that final hour of trade before you enter a position. I think we're going to 94, 95 bucks a share, probably as early as this morning. So that's the price target I'm looking at. We're not oversold on the Bollinger Bands relative to a daily time frame. That was a weekly time frame. So I would look for a more significant overshoot to the downside, maybe even 90, maybe even 100 on the Bollinger, so on price, and an overshoot to the downside below the support level. I would not be a buyer until we flash a bullish key reversal bar, one of my top 5 most powerful candlesticks. If you're not familiar with what a bullish reversal bar is, this is a bullish reversal bar. Bring up a chart of IBM July the 31st of this year. That's a bullish key reversal bar. We don't have that yet. We are still in free fall. This is catching a falling knife. I would not be a buyer right here, right now. Wait for the reversal bar. And of course, I have a couple of requests that are reporting earnings today. So I may get made the fool of here because we'll have to make the call on Facebook and Amazon. So let's take a look at them. Will we go up or down on earnings? Facebook first. Now, I was bullish on Facebook going into the week, but I wanted to see a breakout. And thank goodness that we waited, because not only did it not break out, it broke down. Now, the monthly chart has been sending us signals that back in August we were overbought relative to the third standard deviation Bollinger Band in white. Then in September, very close to an outside reversal bar, close enough for government work, close enough to tell us don't get long of this stock. This month, we're still up on the month, but we are well off the highs of the month. Weekly chart. Now, the weekly chart, we were flirting with a breakout going into the week. We attempted to break out above resistance on Facebook. That breakout was rejected, and now we are flirting with the lower band of support. We are putting in lower highs on RSI and at current. The week is not over yet. We have 2 trading days left to go. But at current, on a weekly time frame, RSI is flirting with a breakdown. Daily chart. You know, once the shares broke 279, 278, you had to avoid these shares. And I think they were coming down here to around 265. Where did we close yesterday? At 267.67, not that far away. So might this support level hold? Sure, it's possible. But we technical analysis is not about having a crystal ball to identify if a support level is going to hold. It's having the foresight of being able to to look at the charts from a multi-time frame perspective, as we're doing right now, and saying, you know what, the market is sending us a signal, and the probability of a support level holding is based upon the trend lines drawn. Because at the support level, the probability of you finding a pool of buyers is far greater than finding a pool of buyers at where we closed yesterday. So it pays to wait for a support level to hold, or it pays to wait for a breakout to occur. Even if you have to pay up a little bit more, so what? You're paying for the probability, the higher probability of being accurate in your call. So don't hold out for the best price all the time. Probabilities of profit matter as well. So don't catch a falling knife. I think we're going lower here. Look for a retest of support. Ideally, we overshoot this support level. Then we reverse to close higher on the day. Then we'll watch earnings. We'll see what happens. Watch forward-looking guidance. Microsoft had good earnings. It was their guidance that killed them. Not to mention the price to sales is absolutely ridiculous, but we won't go there. Amazon, AMZN. Twilio is up in the pre-market. Yeah, be careful of the pre-market trade, right? People are getting baited, or it's shorts covering in advance of a rally, perceived rally. It doesn't matter where a stock trades intraday. What matters is where it closes. And what we want to do is we want to thread the needle. We want to have the S&P 500 validating, or at least the TripQs or the XLK validating that sector is strong. And Carter Worth put out some good commentary last night. I'm a big fan of Carter Worth. Carter Braxton Worth. He's on CNBC. He's a technician. Very, very good one. He's very good with statistics. So every time he speaks, I listen. And 79% of the times when XLK is up, so is the S&P 500. This is a technology-driven market. So watch the XLK, which did not close well yesterday. So Amazon. We're going to come back to the daily chart in a moment. Let's go to the higher level view. And similar to Facebook, we were in fuego in the summer. That all ended with an outside reversal bar in September. This month, a bearish key reversal bar. We have a couple of days left to go in the month. But today and tomorrow, that's it. That's all she wrote. So where we close, where we're at right now, it's a bearish reversal bar. The probabilities of us breaking are quite high. We have a head and shoulders setup on, people laugh at me when I do this, until it breaks. And then they were like, oh, I guess he was right. We have a head and shoulders setup. Where's my arrow? Here we go. Come on, Bob. I can't put an arrow on here. Darn it. All right, so left shoulder, head, right shoulder on RSI. Let's move this down. Here's our neckline. So watch for a break lower on RSI. And I bet that on that break, you're going to see a break of support on Amazon. Weekly chart. Weekly chart, we have lower highs. When it's all over for Amazon, it's not necessarily on a break to a new weekly low or a new daily low. When it's all over for Amazon, is here. Mark this on your calendars. 2888 spot 21. If we break that support level, which was support after putting in a high in August, found support on September the 21st, rallied back. We now have a lower high If we break that support level, that would mean that we are in a new lower low situation. You're going to see algos lean into the short side or distribute shares like an animal, because that's a confirmation that we have a new trend in effect on Amazon. And it won't be pretty. Watch for a break of support. I'll be looking to short it. Confirmation. Breakdown. Time to go short. So what we're doing right now, as this market begins to try to find a very, very short-term bottom, what we're doing is we're getting our shopping list together, not for long-term, long trades, but for short trades in the technology space. I like cyclicals longer term in terms of energy, in terms of the recovery plays in travel and leisure, because they've already been beaten down. Yes, they can go lower, but you have a lot of short interest in those names, and they don't have as much froth as do the tech names. So Amazon, we're waiting for support levels to get breached here. Then we'll look to open up short positions. Daily time frame. Yesterday we broke daily support. We were in a wedge formation or a triangle formation. We have lower highs and lower lows. And we broke support yesterday. I suspect they'll try to rally it back in an effort to try to recapture support. It'll probably fail. Now, what'll salvage this market, at least in the short term, it's what I started off with, right? Why are we here right now? They knew. I even mentioned this on a couple of my videos. They were not going to allow stimulus to pass, Pelosi. They were not going to let it pass unless there was a bailout of the very, very far left, incompetent, left-leaning states. They are destroyed. Whether it be New York, California, Washington, they are a complete and utter mess. They've literally burnt down their own states. So they want the rest of the country to bail out those states, and the president's saying, no, we're not doing that. And we're so close to the election right now, you know what? The heck with it. Let the chips fall where they may, and I think the president is going to pull a lever fairly soon, and we're going to see the futures get whipsawed around. If we sell off today, at some point in time between today and tomorrow, you're going to see a rally in this market. So hopefully a fade, and hopefully a more powerful rally into the close. What about I already went over those names. Most of those names are trained. Google reporting earnings, Apple reporting earnings. I went over them earlier. I didn't go over the charts, but I did go over them earlier. All right, so we're getting long with it here. I'm going to leave off with, I did a video on Twilio the other day. I'm just curious what it's doing. I love Twilio. Still in a downtrend here, despite the pop-up higher this morning. So I would wait for the breakout. Wait for a breakout. This is a 4-hour chart. Pull back and retest. Breakout, pull back and retest. But the market must follow through. Don't bet that if tech overall or the S&P 500 overall is still in decline, yet Twilio is showing relative strength, that it's going to be able to hold that strength. It's very bullish when the markets do turn around. I would want to be a buyer if it's showing relative strength during the sell-off. but I would wait. All right, folks. Don't forget, tonight, let me do my self-serving reminder here. Join us. Oh, I'm live now. Look at this guy. Join us tonight for Thursday Night Stock Charts Live, 6 p.m. Eastern Standard Time. Set a reminder or go to this link here, get alerted 15 minutes prior to us going live, or get my 5-part video tutorial on candlestick charting. And we hate spam too. Don't enter your email address twice. If you're already on a list, don't enter it again. Select one of these 3 and you'll get alerted. Everybody have a profitable trading day, and I will talk to you soon. Be well.